start us off in New York, and one of the major hedge funds there has been charged with insider trading.
Yes, the company is SAC Capital. At its peak, it managed $15 billion worth of clients' money. The US authorities have lodged 5 charges of insider trading against the company, saying it had become a magnet for market cheats after earning hundreds of millions of dollars illegally. Hala Mohiuddin has the story.
With a charge sheet detailing wire fraud and 4 counts of securities fraud, SAC Capital Advisors is facing the most serious insider trading charges in history.
As alleged, SAC trafficked in inside information on a scale without any known precedent in the history of hedge funds.
The alleged scheme, which involved more than 20 companies and went back as far as 1999, helped reap hundreds of millions of dollars in illicit profits, something prosecutors say the company was fully complicit in.
Management at SAC Capital, including the firm's owner, actively recruited portfolio managers and research analysts with access to inside information.
The decade-long investigation has resulted in charges being brought against 4 people, and 2 guilty pleas have helped strengthen the US case. SAC Capital Advisors issued a firm denial of the charges and said it had never encouraged, promoted or tolerated insider trading and takes its compliance and management obligations seriously. While the firm may still be able to operate, many Wall Street companies that trade with SAC are likely to stop as a result of the criminal case. SAC Capital stands out on Wall Street for its mammoth returns, and CEO Stephen Cohen is one of the highest profile figures in American finance. He's facing civil charges, which could put an end to his glittering career, while the criminal charges against SAC may result in the firm being wound up.
Staying in the United States, and details of what's being called one of the biggest online fraud cases in US history have emerged. 5 men have been charged over hacking and credit card fraud worth some $300 million. The scheme targeted companies including Carrefour, JetBlue Airways and the American clothing retailer JCPenney. Now, it's estimated the gang stole at least 160 million payment card numbers. 2 of the suspects are in custody, while the authorities are still searching for 3 other men.
And how are the markets trading today, Stephen?
In Japan, the fall of the value of the US dollar has hit trading on the Nikkei. It opened down over 2%. It's even further down now, about 2.8%. The other markets there you can see trading slightly flat. Shanghai Composite down 0.64%. Japan investors also digesting the news that consumer prices rose in June for the first time in 14 months. Excluding fresh foods, prices rose 0.4%. Another sign the government's massive fiscal stimulus programme is working. Claire, rising prices aren't good news for most of us, but they are good news for the Japanese economy.
Absolutely. Let's move on now with a look at some of the day's other business stories.
And we'll start with Toyota, which remains the world's biggest selling car maker for the first half of this year, beating rival General Motors. The Japanese manufacturer says it sold 4.91 million vehicles up to the end of June, some 60,000 more than GM. That's despite a fall of 1.2% in sales.
Air France-KLM says its massive cost-cutting plan has helped to reduce losses by 4/5. Net losses at Europe's biggest airline group fell to €163 million in the 3 months at the end of June. Overall, the carrier posted an operating profit of €79 million in the first 6 months of 2013.
And the French entertainment and telecoms group Vivendi is to sell the majority of its shares in computer games maker Activision for $8.2 billion. The buyout is being led by Activision's co-chairman and CEO, who will use cash and debts to buy 85% of Vivendi's stake. The deal will leave the French company with a 12% share in the group, behind games including Call of Duty and World of Warcraft.
Yeah, I'm liking this story. Their bare chests may get shoppers' attention, but now the good looks of staff at Abercrombie & Fitch have attracted somebody else's gaze too, Stephen.
Are you a fan of Abercrombie & Fitch, Claire?
Of the bare chests.
I see. Well, French regulators are looking at whether the US clothes firm is being discriminatory in choosing those good-looking staff for its store in central Paris. The firm says they employ models who have to look a certain way, but French authorities are looking at whether, in fact, these models are just vendors, in which case they can't be discriminated against because of how they look.
And finally, We've been talking a lot about the economic benefits of the royal baby in Britain, but Lego is the latest brand to cash in on little Prince George's arrival.
Yes, Legoland in Windsor, just outside London, has a new model of the capital, which includes Buckingham Palace and the newest member of the royal family. It shows the royal easel, which announced Prince George's arrival at the outside Buckingham Palace. You can see there's also Prince George in his pram. I can tell you that Prince George, the model of him, makes up just 6 bricks, and there are 55 bricks that make up his pram. So a small model of a big arrival.
Thank you very much, Stephen Carrol, for that roundup of the business news. Now, a reminder of our headlines. Cambodians will be heading to the polls on Sunday, but surrounding those general elections is a very special political context. Last week, the historical leader of the country's opposition returned from exile after being pardoned by the king for charges he faced. Sam Rainsy, head of the Cambodian National Rescue Party, is a vocal critic of current Prime Minister Hun Sen, who maintains a firm grip over power. A France 24 team brings you this exclusive report as they followed Sam Rainsy on his flight home.
This